Hello, YouTube. So, have you ever stared at your tax bill and wondered there has to be a better way? Well, there is. And in this video, I'm going to discuss the 12 biggest tax write-offs that you can take as a small business. So, if that's you, you're going to want to watch this video in its entirety. And by the end of the video, you'll be equipped with powerful knowledge that can help your small business save thousands of dollars, if not tens of thousands of dollars in taxes. So let's start off by determining what a tax write-off even is. It's pretty simple. It's just an expense that you can use to deduct from your taxable income come tax time. So here's an example. You have $100,000 in revenue, but you found $20,000 worth of write-offs that you can deduct from your taxable income. So that $100,000 in revenue drops down to $80,000 in taxable income because you found write-offs worth $20,000. So now that that's clear, let's talk about the big 12, right? The 12 biggest tax write-offs that you can use as a small business. So the first thing that you can write off as a small business owner is your travel. All the expenses related to business travel can be written off. This includes the cost of your ticket, your hotel, your Uber, your rental car, your dry cleaning, your tips, and more. And in the instance that you like to mix business and pleasure, and that business trip turns into a vacation, you can write off the portion of the trip that was used for business, not the entire thing. But to be able to write your business off as travel, you must meet the following 3 conditions. First, the trip must be necessary and ordinary for your business. Secondly, the trip must be in a different city than your business address. And lastly, you must be traveling for more than a business day, and the trip must require lodging. So I made a complete video on business travel and how to write it off. So if that's interesting to you, make sure you watch it after this video. I'll link it in the description. All right, business write-off number 2 for your small business is your home. Because if you use a part of your home exclusively and regularly for your business, then you can write it off. And you do this by using the home office deduction. But listen closely, because there are 2 ways that you can go about writing this off. First, you have the simplified option, which lets you write off $5 per square foot of your home. Now, that's up to a limit of 300 square feet. And like the name implies, this method is simple compared to the second method. And the second method is called the regular method. Now, this method, as I mentioned, is a bit more complex, as it requires you to calculate all the expenses that you use for that home office as a percentage of your total home expenses. So, Karan, what does that really mean? Well, common home expenses that you can write off using the regular method includes the following: utilities like electricity and internet, mortgage insurance and interest, homeowners association, renters insurance, and even depreciation. All right, write-off number 3, your kids. So employing your kids can lead to a ton of tax savings. If your child is under 18, then their income isn't subject to Social Security or Medicare tax. And if they earn less than the standard deduction, then they won't owe any taxes either. And that's the win-win, because they don't pay any taxes and you get to write off the salary that you give them. But there's the key here, right, that you can't miss. The work that you give your kids to do must be legitimate, age appropriate, and at a fair rate. All right, number 4 on the list is your education. So education expenses related to your business can be deducted. Courses, books, webinars, workshops, you name it. If it's education for your business, you can write it off. And then we have number 5, which is your meals. So whether it's a quick coffee with a client or a dinner to close a deal, your business meals are tax deductible. So the next question is, how much can you deduct? 10%, 20%, 100%? Let's talk about it. And let's talk about my favorite, which is 100% first. So if you want to write off 100% of your business meals, then they have to fall under these categories. It can be a meal for recreational employee events, like holiday parties, team building activities, summer picnics for the team, right? Or the meal has to be essential for your business. So if you're a food blogger, your business depends on meals. So you can write that off 100%. And the last category of meals that you can write off 100% of the way is meals that are provided or sold to customers. All right, so that's the 100% category. Let's talk about the 50% category. Meals during a business trip, right? We talked about business travel earlier. If you're on that trip and you decide to eat, which I'm sure you will, then you can write off 50% of that meal. And the last category for 50% business meals is in-office meals for employees or customers. All right, number 6 is your startup costs. Now, this is the big one for new business owners. The IRS allows you to write off $5,000 in startup costs and another $5,000 in what's called organizational costs. So, Karan, what's the difference? Well, startup costs are the costs incurred to actually start the business, right? So that would be costs to research the business, get an office, business cards, training yourself or your staff, and everything in between, right? Startup costs. Now compare that to your organizational costs. Organizational costs are the costs to incorporate your business. So think costs to incorporate your LLC, right? Legal fees and state incorporation fees. Now that's pretty simple, but it's not that black and white. There's something that you need to be aware of. If your startup costs are over $50,000, then your allowable deduction is reduced dollar for dollar above $50,000. And if you spend more than $55,000, the deduction disappears completely. The seventh thing that you can write off as a small business is your healthcare. Now, this is one of those deductions that are highly underrated and highly underutilized, but is massive if used correctly. And that's because if you have what's called a high deductible health plan, then by using an HSA, also known as a health savings account, you get what I call the triple tax break. Here's why it's called the triple tax break. Contributions are tax deductible. Growth is tax free. And withdrawals for eligible healthcare, that's also tax free. And here's a quick tip. You can use the money in an HSA to invest in the stock market and have that money grow tax free. Now, for 2023, the contribution limit is $3,850 for self coverage and $7,750 for family coverage. So, all in all, it's a tax benefit and a health benefit in one. All right, write off number 8 is your vehicle. So, there are 2 ways the IRS allows you to write off your vehicle as a small business. And the first way is called the standard mileage rate. And when you use the standard mileage rate, you multiply the miles driven for business by the standard mileage rate set by the IRS. So for 2023, the standard mileage rate is 65.5 cents per mile, which is actually up 3 cents from last year. So if you drove 1,000 miles for business, you would multiply that 1,000 by 65.5 cents. Now, the second method is called the actual expense method. And when you use the actual expense method, you track all of your expenses. So the gas, insurance, repairs, you get it. You multiply those expenses by the percentage of miles driven for business. So if you have $5,000 in vehicle expenses and you use your car 20% of the time for business, you would multiply 5,000 by 20% to get a total deduction of $1,000. But regardless of the method that you use, be sure to keep detailed records of the miles driven specifically for a business. And if you want to see a video that goes into deep detail about writing off your vehicle, then watch this video next. All right, write-off number 9 is your furniture and your equipment. If you're running a business from home or have a designated office like we talked about, then you can write off the furniture and the equipment for that space. So take this office, for example. Right over there, I have a desk, right? I have floating shelves. I have books that I read for business, right? I have a chair right here, monitors, right? All of these things can be written off. So you're gonna wanna keep track of the things that you spend for your office because the IRS allows you to write these things off. Now, the 10th write-off is your cost of goods. If you sell a physical product, you can write off the entire cost associated with creating that product. So common cost of goods include raw materials, packaging, supply costs, equipment costs, shipping costs, storage costs, commission and affiliate costs, overhead costs, right? I think you get it. All of these things can be written off under cost of goods. So be sure to include and document and track all the expenses that you incur to create your products. All right, number 11, work clothes. So you may be able to write off clothing that is ordinary and necessary for your business to operate. Now, writing off clothing can be tricky, but here's a rule of thumb that I want you to follow. And that's if the uniform, right, or the clothing that you wear for your business can be worn outside of work, right, or outside of your business, then it's not deductible. You can't write it off. That means that you can't write off a suit even if you wear it specifically for your business and only for your business, because a suit is generally accepted outside of work. But here are a few examples of clothing that are considered deductible. Protective clothing, right? Like boots and masks, or uniforms, which are company logo on it, and even costumes. And then we have number 12, which is all ordinary and necessary expenses. Look, the tax law allows you to deduct any expenses that is ordinary and necessary for your business. Ordinary simply means that it is commonly accepted in your industry. Necessary means that it is helpful and appropriate for your business. But whatever it is that you plan on writing off, be sure to keep clear, detailed records of those expenses. Now, if you truly want to take advantage of these tax write-offs, then watch one of these videos next. And if you found this video helpful, do me a favor, hit that like button. It truly helps with the YouTube algorithm, and consider subscribing for more videos like this that helps you save on taxes and build your wealth. I'm Karan from Lyfe Accounting, and I'll see you in the next video.